All right. Let's chat a little bit about dissonance, cognitive dissonance. A trait we all have, and it can really distort your thinking and perception in ways that are really detrimental and possibly devastating to performance of any group, in trading, in sports, in anything. So let's talk a little bit about how it can impact your performance if you're not self-aware as a trader. So they're applicable, obviously, in the real world as well as with trading. But I remember, although I don't find much worth in what Dennis Gartman sells anymore or states, he once said capital comes in two varieties: mental, and that is which is in your pocket, those two. And the mental type of capital is the most important and also most expensive. So mental capital is so important because it's so difficult to control and manage, because our minds don't work in the way that we like to think they do. So in a perfect scenario, we would like to think that they would make rational and sound decisions. But when you have everything kind of lined up, pros and cons, outcomes considered, that come out, somewhat different. Reality is very different. So markets are very complex, very volatile, very uncertain. And the uncertainty you can't control, the risk you can. And we've talked about this in other videos. So this uncertainty and the volatility restricts our ability to then act rationally, because there's so many outside influences, so many factors, that it becomes very difficult, and very difficult, and or very easily you become swayed by factors which really don't influence the way you think. So this is where this whole burgeoning industry of behavior finance tries to look at how these factors impact our decision making. So affects our actions and our behaviors. One of the things just want to talk about, and why it's so difficult, is again that complexity in the markets. It's characterized again by that high level of uncertainty. We're not talking about risk. We're talking about certainty and uncertainty. Volatility, and then again those non-constant variables. So there's so many pieces and parts moving. This complex system can have causes and effects that are only clear with hindsight. So how do you deal in a situation like this? How do you, in this world of complex systems, where people are seeking certainty and programming, they want to logically program some software, it's difficult. And this is the one thing I always try to tell people: like, you can come in and sit at my desk and I can tell you exactly what I do, yet your cognitive dissonance is different than mine. Therefore, you're going to behave differently if you don't train yourself about this type of condition. So these mental biases can easily distort your thinking, your perceptions, and this dissonance is one of the most nasty of all the kind of psychological issues that are sitting back between your two ears, and it can have really deadly performance as far as consequences on your performance. You may be a short-term trader, and then you start thinking long-term, or vice versa. And these things kind of show up. We find ourselves, kind of facing this inconvenient truth. How do we deal with it? The market may be going lower, but we continue to believe in our bullish case, or vice versa again. So these types of things based on what we think versus what is actually happening is why the market profile becomes a tool really to help me. So you really can't look at a profile and say we're in value, out of value, above or below. That's really all you need to know, and how far out of value and what time frame am I behaving at. So these are the things that you really have to look at, and how I get over any dissonance that I may have, both long-term versus short-term, or short-term versus long-term. And again, this game is really not about being right. It's just about making money. So what do you care if it's going down right now, even though you want it to go up, if you can make money on the downside? And that's the difficult thing, is kind of finding that way to get over whatever your head rationally is thinking and just go with it and surf. So the right thing that you really need to do is kind of, again, get rid of that noise, get rid of the things that can distract and distort your point of view and the time frame that you behave in. This will help in getting rid of your performance disruptions. And really, it can kill your performance if you don't. And it may sound it's right, but it really is this way. So you really have to find a way to develop better behavioral practices when you get into that situation where it's like, okay, I may have a long-term bias to the upside, yet we're going down. So being blind to your blindness is not an excuse. You have to find a way to deal with this dissonance and recognize it and have tools then to work through it and make the right judgment in a short-term moment on the trading side. So that's another area that we really work with our students on, and we talk about this. We talk about it really for a good chunk of the week while we're here, because we all have these, we all have our biases, and they can be helpful and they can be very hurtful. So put yourself into the context, since we're talking about context again this week. Fantastic subject, and we'll be back with more subjects like this. And if you have any questions, give us a call, 541-728-3217.